Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. welcome everyone. Thanks for joining. We're gonna get started in just a couple minutes, and we're gonna go till 8 p.m. and then I gotta wrap it up. Okay, guys. We're gonna go over our swing trading, and then we'll go back to our regular Tokyo sessions this week, where we just do a top-down analysis and go into lower time frames and look for a few scalps going into the futures market. Okay. Hope everyone had a good weekend, and we're ready to go in just a couple minutes.
Hey guys, good morning, welcome to the live session with Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey, welcome everyone. Good evening. Thanks everyone for joining. Welcome to Stock Sniper Trading. My name is Ron. My partner is Dave. It's 6:40 p.m. Eastern over here, and it is Monday, December 15. So thanks everyone for joining. We're halfway through the month of December, and we got just a little stretch left going into that Santa Claus rally right after Christmas and into the New Year's break. So we have just a few days left this year to wrap up. Because we're going to have some holidays and where the U.S. banks will be closed in the next few weeks. So let's try and make the best of what we got left. A lot of traders at this time have taken the remaining part of the year off. So you just got to think about when you're trading into the end of the year, if you are trading spreads, volume, and things like that, if you've met weekly, monthly goals, yearly goals, it's not bad. It's not a bad idea to take some time off and then come back in the new year. But we'll be navigating through the markets with you guys, showing you. Last year we took a break, like the last week of the year. Dave and I took a break. But Dave will probably be taking a break soon, but I'll be with you guys on the days that the markets are open. Obviously not on Christmas and Boxing Day and New Year's Day, but we'll be with you guys for the most of the part, and we'll get some good education out of it. Maybe we can have more like Q&As. We can have open mic discussions where you guys can unmute your mics and ask some questions, and I can do my best to help you guys out, okay? And I hope everyone had a great weekend. Guys, I'm a little under the weather. My son was really sick over the weekend. I had to cancel our New York session. I had to take him to the clinic, and I think when I was at the clinic I picked up some type of bug over there, but I feel really like I feel like I'm getting really sick right now. That's why I'm going to just go over this session with us. It's going to kind of break down what's going on this week in the markets. We'll review our swing trading with gold and oil, and then I got to wrap it up because I want to go into the sauna and get a little bit of rest and try and fight this cold off, because I don't want to get sick for this part of the year, because I want to be with you guys, okay? So hopefully everyone's doing good. Thanks everyone for joining. I'm going to get started. I don't want to keep you guys too long. First things first is tomorrow, guys, there's a lot going on in the markets, okay? I hope that you guys have already done your analysis for the week, but tomorrow is not a normal news day. Like, I would recommend maybe, guys, trade smaller tomorrow, reduce your trading. I know a lot of you guys are not going to listen to me. Probably a lot of you guys are going to go hardcore tomorrow and do your thing, but just listen to me, okay? Whether you take my advice or not, just take a look at the tomorrow, the folders. Okay, there's a lot coming out in Europe pre-London. GBP has high impact folders right here, and then we move into all of the flash manufacturing, flash services. So we have German, we've got British. There's lots coming out of the Eurozone. Then we start to come in here. Then after it's 8:20, it's COMEX market open. And look at all the high impact US folders we have. A lot of these folders are getting caught up from the government shutdown. And we have like NFP tomorrow morning. Normally NFP is the first Friday of every single month at the beginning of December, but with the delay of the government shutdown, everything is kind of just getting clumped together. And tomorrow could be one of the craziest days I've ever seen in a long time. Just at 8:30, you've got your average hourly earnings month over month. So it looks like they are increasing in the forecast, their previous month's month over month wages. We have core retail sales month over month. You have your non-farm employment change. From 119,000, they're reducing the forecast down significantly down to 51,000. And if this number comes out lower than 51,000, it'll be a red number and it will be basically very bad for the US dollar. So they're setting the bar again very low. Just to create 51,000 jobs. And if they cannot exceed this or beat this, it's going to be another disastrous day for the US dollar. So that is coming out. Then we have our regular retail sales. Remember, the first one is core meaning it's excluding something. So when you see the word core, it's excluding automobiles in these retail sales. When you see the one retail sales without core, it includes automobile sales. And then we have the unemployment rate. This is a big one too. This is where it was 4.4% at the last NFP, and their forecast is saying that unemployment is going up by 0.1% to 4.5. We want to get unemployment down lowest number possible. We don't want unemployment numbers to go up. That means that more individuals are seeking employment and they don't have work. So they're applying for their unemployment benefits. And that's what we see every Thursday morning at 8:30 with our unemployment claims. So if you remember last Thursday, they increased a lot where the week over week unemployment was a big increase. So this is what's going on tomorrow, and it doesn't stop. After we get all of that, then the market will settle down after all of that volatility. Then we move into Wall Street at 9:30. With Wall Street market opening up, it's pretty volatile when Wall Street opens up. Then 15 minutes later, we have the US flash manufacturing PMI and the flash services PMI. And you guys know it's kind of like a above 50 and below 50. So the previous months were above 50 and the forecasts are above 50 as well. Above 50 meaning expanding manufacturing sector. Anything below 50 is a contracting and shrinking economy, okay? And that is all tomorrow. Like if you count these US folders, you got 1, 2, 3, 4, 5, 6, 7, 8 of them. 8 folders all back to back. So I can pretty much say that some of you guys are going to do really well because some of you guys are going to manage your risk. Some of you guys are going to trade smart tomorrow. Some of you guys might even avoid trading. That's a smart decision as well. Unfortunately, I'm going to have to say some of you guys are maybe going to do some stupid things tomorrow, probably blow up accounts, lose a lot because you're not respecting all of these folders, okay? And that's going to be on you. That's your decision. I'm making my decision that if I'm trading tomorrow at this time, I'm reducing my risk and I can carry it once later in the day. I can come back for Tokyo. I can trade the following day, but I don't want to do anything detrimental to my account when they're releasing all of these folders, okay? Because this could be a lot of mixed results because a lot of these should have been released earlier in the year, but the government shutdown kind of delayed that. So a lot of these now are coming out now and they can be mixed results too, and they can be revised also. So just be careful trading at this time, okay? Proper risk management. Then we go into Wednesday this week. After all of that, then it continues. We don't have much going on Wednesday, just our regular crude oil inventories that we have, some FOMC speakers. And then we move into Thursday of this week. starts getting busy with UK. They have their basically like their FOMC, their monetary policy. Looks like the UK is going to decrease 0.25% in the forecast from 4% to 3.75. That will be released 7 a.m. Eastern. So you guys know that the London market opens up 3 a.m. Eastern. So this is 4 hours later. Will be released during New York times over here. Then you have your Bank of England Governor Bailey speaking. 8:15, we got some European refinancing rate, monetary policy. So a lot to do in Europe. And then we move into 8:30, our North American time. We have our weekly unemployment claims. So from last week, 236. This was a red number that was over and above the previous months, and they're forecasting a little lower to 225. We'll see the actual results when they come out. Okay, and then finally to wrap up the week on Friday this week, December 19. So we're getting closer to Christmas. So you might see reduced volume in the markets as we get into the end of the week. There's not much major news on Friday, so just be careful trading on the Friday going into the weekend, because when we start the next week, you can see Monday, pretty light day in the markets, December 22. We'll do that. We'll open up a Monday session early. And then Tuesday is basically like our last day trading because you can see on the 24th, it's Christmas Eve. Everything is closed. You probably want to take a day off on Christmas Eve, be with your family. Everything is closed. December 26th, this is Boxing Day in North America. Everything is closed as well. Then we'll pick it up the next week on Monday. Again, December 29, we'll do Tuesday, and then everything is pretty much closed again for New Year's Eve and New Year's Day, and then we'll come back start the new year. Okay, guys. So tomorrow's a big day news-wise. Please be careful trading. Earnings this week. There's some earnings to talk about as we get more into the end of the week. So not much going on tomorrow. Wednesday before open, not a lot going on. Wednesday after close, you got Micron technology. So we'll see how it does. This is like AI tech as well over here, chips. We'll see if it can. Right now, there's a little bit of a drop in the markets. You can see markets are selling off, and we'll see if tech can hold it up. Right now, like it's Oracle is taking a big hit due to their last earnings and their forward guidance. So we'll see if the other ones follow, and we might see a little bit of a market sell-off going into that Santa Claus rally. And we also have Nike, FedEx reporting this week, and Friday, just a few. Okay, so not much going on in earnings. In the news, guys, lots going on in the news. Gold, hopefully you guys are watching gold. We almost hit the all-time high. That's why I'm going to talk about our 4-hour swing buy trade. I hope some of you guys took that swing buy trade because it was 1 to 2,000 pips. Could have been your weekly goal. Otherwise, if we're learning how to swing trade. So that's what I want to go over on today's call, is to talk about that, and also the oil setup where you could have potentially taken an oil sell instead of the buy. And I want to talk about that because there was 3 wicks rejected at the buy area. When you see that, you can switch your focus and become a seller, because you see it got rejected 3 times at a potential buying area. So you got to kind of treat your swing trading like you do scalping. That's why if you do really well as a scalper, you can really understand how to swing trade and really learn both styles of trading at the same time. And then you got the best of both worlds. Okay, so this is the news, what's going on in the markets right now. We're just moving over. Guys, there's a free Telegram channel pinned at the top of the channel for you guys. It's a free Telegram. It's right over here. You get all of our links to all of our live sessions, all of our blogs. I want to go over this blog with us tonight. It's a really important blog. It's about the psychology and mindset in trading. So I really want us to have the right mindset for the rest of the week and going more specifically into the new year. I want you guys to start off 2026 with the right mindset, to start the year off properly. And it might be your best year of trading ever. I had this same conversation with the snipers at the end of last year going into 2025, and it was all about mindset. So these are those talks we're gonna have a year later, and this is when we can review and say, did you stick to your rules? Did you follow your trading rules? Is there anything that you could have improved on? This is where you got to look back and be critical to yourself, and kind of criticize where you can make necessary improvements. All traders at all levels need to make improvements. I need to make improvements. So if I need to make improvements, I'm sure you guys got to make your improvements as well. Doesn't mean that you're a bad trader. It's just we're not perfect traders. So you do need to make some necessary improvements, okay? I need to make some improvements when I'm live trading and when I'm streaming and things like that. So that's what I need to work on that as well, because I'm streaming live and trading. I'm not a streamer, I'm a trader. So I'm learning the art of live trading. It's been 6 years now. I believe I'm getting good at it, but I can improve on some areas too, so I got to improve on that to be here every single day with you guys as well. And guys, there's a lot going on here in this Telegram channel. It's pinned at the top for you guys. Visit our website too if you want to join the team. And here's our live sessions, our schedule this week. We release it every Sunday. So you can see I had to cancel this morning's New York session. I had to take my son to the doctor. I apologize, guys. And then Dave is the rest of the week, New York, 8 to 10 a.m. in the Zoom if you guys want to join Dave. And I'll be doing the rest Tokyo sessions all this week. Again, starting at 6:30, we'll go to 8:30. But today's just the swing trading one. Then we're going to go back to our regular routine where we're going to just come into gold, do a top-down analysis on gold, bring it down to the 5 minutes, and then we'll be scalping Tuesday, Wednesday, and Thursday. And then finally on Friday, guys, for members only on the website, I'm going to upload this is a new thing I'm doing. It's the intro to trading psychology and mindset. So where are you going to find this? If you go to education right here, you're going to see our coaches. This is me, and here's Dave. And then you're going to see a new coach over here. It's going to be our SST psychology and mindset coach. And you're going to see there's going to be a little series here. They're going to be pre-recorded webinars to 30 to 1 hour long. And they will be uploaded here so that you guys can have a little bit of homework if you guys want on the weekend to kind of improve your psychology. I'll be touching up on 25 topics. So I have enough for the next 25 to 50 weeks here of videos that will be uploaded for you guys. And we're constantly working on new stuff coming in the near future for you guys, okay? And if you guys can finally just give us a like, hit the subscribe button if you're not subscribed already. We do appreciate it. Thank you, guys. So I'd like to get into it. Thanks, everyone, for joining. We're going to go for 1 hour, and then we're going to wrap it up at 8. But I got a lot of things to go over on the swing trading charts. And I hope that you guys were following the swing trading that we did. We did 3 sessions last week. This is our 4th session to kind of wrap it up, to kind of get you to what you should be looking for. Okay, so thanks for joining, Justin. Welcome. I hope you had a good weekend, Justin. Sergio, thank you. Welcome. Lorraine, thank you for joining. Conrad, thanks for joining, guys. And everyone on YouTube, I appreciate all of you guys as well. Justin, Charles, Sergio, Jags, welcome. It's been a while. Thanks for tuning in. I appreciate you, brother. I remember you. Thanks, guys. To all of the guys coming back, I do appreciate all of you guys. Even if it's just to say hello or check in, I appreciate you guys. I hope you guys are all doing good. I hope life is treating you guys good. And you guys are welcome to stop in, pop in, say hello anytime, guys. The door is wide open here at SST for anybody. So I do remember a lot of names, guys, and familiar faces. So I'm good at those things. So I remember a lot of you guys. Jay Violet, thank you for joining. Our condolences go to you with everything going on in Australia out there. I know you're from Australia, and there's the world it's crazy right now. All over the world. It's not just Australia. All over the world. Man, it's crazy times we're living in. So our hearts go out with all of the innocent lives for stupid behaviors, guys. And to everyone else, thanks for joining. We welcome you guys, okay? Now, I want to talk about, okay, so I know some of you guys are here maybe for scalping, but that's not the focus of today's call. We'll do that the rest of the week. I just want to wrap up the end of this kind of swing trading to make sure and to see. I introduce swing trading to you guys. Maybe some of you guys will like to trade like this. Some of you guys maybe will not like it, but that's the choice. But what I want you guys to see is how you can treat these exactly like a lower time frame, but you're just holding longer. And this works well for your lifestyle if you're busy and things like that, and you cannot swing trade. Okay, so what we were looking at here was we were in this type of consolidation when we did our first day one and our day two, and then we started to see the market start to build up Wednesday. Remember, we had FOMC. So FOMC really started to move the market. It moved up. And right to remember, I have not changed these lines or anything. These are the exact lines I've had on my chart from day one since we did these. That's what I want you guys to do, and place alerts at these points of interest or at these zones, and you trade off of these, okay? And it made its move right up to that daily point of interest, and then it pushed all the way back down. And then as it started to come back up, remember, I hope what you guys did was what I talked about. This was a big important candle. That was FOMC, and it closed above structure. So that's when you want to find the point of control of this bar, just like we do on the 5 minutes. So the way how you do that is you use your Fibonacci tool, you find the halfway point, and then you find your 382, 618. That's how you find exactly 50% in your zone. And then it came right in there. And then it accumulated in that zone. You had a pullback right there, and this was the candle I bought. I took this as a swing trade, okay? And normally you guys know me as a scalper. You guys don't know me as a swing trader, but I follow the same rules as I do swing trading: entries, exits, TPs, targets, 80-20 rule, flipping zones if volume cooperates, all of those things like I do on the 5 minutes, I do on the 4 hours too. So if you got in, some of you guys, I asked you last week, did you get in on this bar? Some of you guys said yes. Now, did you continue to follow it? Did you see when it closed above this red zone? Did you flip this big red zone green at that time when you did that? You had the confirmation that this big bullish bar broke out and closed with physical volume above that red zone. So now what I do is when the buying volume shows me convincingly that it closed above, I flip it green, because any pullbacks, I look that this is developing like a block in the market of pending buy orders. And you can see that this purple line was a significant line. We even wrote prior when we were doing our analysis that this was December's monthly high and there's December's monthly low. So you see off of the low of December, they made a higher low, they made a higher low, they made a higher low, and then they continued to push it out to break December's resistance. The entire month of December, that was the previous high, and it broke out and closed above. Now, you see how it uses the purple line as support now. Now what it's doing is the previous December monthly high, it's using it as the monthly support right now. So you see how I did not change the purple line. I didn't even change the name over here. I left everything. But you see now it comes back down to retest now. So all of the buyers are protecting the December monthly supporting level right here. And then it came back up, closed like a bullish pin bar. Then this was Thursday. Then they gapped it up here, brought it down, but you see again, wick at the purple line, then it built again. And what is this pattern that you recognize? I hope all of you guys recognize a bullish flag pattern, right? And it's just consolidating. Here's the big flagpole, the big bullish candle. And then the flag, these are 4-hour candles. So it flagged for 4-hour, 8-hour, 12-hour, then finally it redistributed again to the upside. So if this was 5 minutes, we had a big 5-minute candle, and then we had another 5-minute consolidated candle, another 5-minute. Maybe we were in a 5-minute bull flag. And what do I always say? Bull flags have a high probability of continuing to break out to the upside. It's not always 100% guaranteed, but when you know that, then you can maybe hold the trade a little longer and see if that actually is in fact true. Again, the trading is a game of probabilities. Okay, you're not going to be 100%. Sorry to burst your bubble. And if you were perfect today, you were 5 of 5 or 10 out of 10, and you're on a win streak. I've been on win streaks myself too, but I'm going to tell you that your win streaks will eventually end. I hope they don't. I hope you can keep them winning forever, but reality will set in and you will get stopped out at some point, okay? I wish I could tell you that trading was all guaranteed, but I don't want to be that guy. I'm being honest with you guys. You guys know this, okay? So what we do as traders is we find high probable setups and we recognize probable patterns, okay? That's a bullish flag pattern. So if you continue to see that, look, it didn't even retrace back into 50%. That's a shallow pullback, higher low, higher low, higher low, and then it continued to advance out of there. So I don't know. I'm going to ask you guys, did anybody take this swing buy and get some good pips? Because just up to where the flag is, or to that's almost 700 pips right there, to that move, right? And if you continue to advance this out of here, look at where we started to move. And then we had a nice big bullish candle again. If you cut this candle in half on Friday, you cut it in half. Why this candle? Because this candle closed above all of this structure, right? So if you cut it in half, you could have found the point of control of this, and then same like a 5-minute candle. Look at where it closed. How high was the wick? Look at it closed about, I would say 95% right to the high, right? And then you got a short wick. And then when this candle opens up, it opened black, but look, it just shallow pullback. Did it test this red zone, like this? It closed into it. That could be support. Did it come into 50%? No. Shallow pullback, a short wick. It popped it and continued to fill. And look, it also closed right above this red zone, but you see, it didn't last long. So what you could have done is, as soon as it kind of closed above there, if you went green, you see the candle did open bullish, fill the wick, and drive up to there, okay? But you do have to recognize, remember this orange line? That's the all-time high of gold, where it had that double top right there on October 16 and October 20th. Double top, that was the all-time high, and it dropped. We were coming all the way back up, but, we were just shy of coming into the all-time high. So, and then look at the big candle on Friday coming all the way down. Black, it takes one candle, can be that elevator coming all the way down, all the way down. Look at where it came all the way down to that purple line, swept the liquidity, and then continued to drive back up. And then look at where the volume closed above, the bullish flag, and then it advanced the one next leg coming right back up. So this big nasty black candle, even to swing traders that had all of that profit, and I'm talking like to come all the way up there, guys, that's about 1,400 pips. On a move like that, you should definitely have closed out a majority of your position, right? You don't want to get greedy with swing trading either. If you get 500, 1,000, 13, 14, 1,500 pips, then that greed factor will take over. That little voice in your head, it's going to say, I want 2,000, I want 3,000, I want 5,000 pips. And then the market knows how greedy we are and will do one of these flush candles. And if we don't do anything, that thing could have flushed out everything down there, and you would have nothing to show for, right? If you had like a trailing stop loss or something. But that's why it's good to take money out. That's why I have like an 80-20 rule, where I take out 80%, leave 20% running, because this can be demoralizing if something like this happens. And the thing is, if you follow the volume too, it's not a bad idea to take some money out, and then you can follow the move. At least you realize some profit. You can help grow your account. That's good to help with compound growth. Learn how to continue to swing trade so that we can look for another one. And then if you saw this one came all the way down, look, it swept the lows. So there was liquidity down there. It grabbed it. And then the buyers brought it right back up, and look at where it closed. And then again, next bar opened, came down, but look at how it's retesting the yellow line. This is a daily point of interest. It all comes from doing a solid top-down analysis. And you can see that the volume is still respecting this. And then look at the next leg. It was a next buy leg. You could have swung that leg coming right back up. But when you come into the area where you've got all of the rejections, you still have to understand that there's a lot of selling pressure right here. at these zones, like right to those high wicks, bring it down to the bodies, right? So this is what I do when I'm scalping the markets. Why would I not do this when I'm swing trading? And then you see it's a double top. See what they did? That's the all-time high orange line. That was as high as it got. Then it came right back in, and look, lower high, there's your kind of your indecision candle, your star. And then again, it opened up lower high, and then you got a bearish shooting star candle closing where? Right around 50% of this bullish candle. Then we started to move up today, 9 a.m. And look at gold came all the way back down. Now we're back below. See this green zone? The volume is below it. So I'm going to change this from green to red. Now the sellers have control. Right now, currently, do they have all the control? No, because there's still strong buying down here and we still have this green block. But you can now see, hopefully, maybe you can recognize a pattern that we came in and then there's the neckline, came back up, there's the double top, and there's that push down. But you see the neckline, it's this yellow line. Can we get the volume to close below there? And will it push down even further down? Okay, it might come right back up and it might try to break through here and get to that all-time high. But right now you can see sellers established the double top right there. They're below here. So we could continue. If it sells down, I would be looking for this leg to see if black volume can close back below here and maybe come back where? In this consolidated area, in that bull flag, that could be where the true neckline is. So if the volume sellers sell right back in there, that's where I'm going to place an alert and watch at 4275. Because if the buyers step in, they can maybe close it back above and then maybe have one more leg to try and push out and break through all of this and get to that all-time high. But right now the sellers are here. They said we've shut it down. Right there and right there. Now it's going to be, again, we might get in a phase where it's sideways like this until we get the next bigger move. And if the sellers get it below here, and then I would think that we could get into maybe like a sell, and then to come back down and take out the December monthly low and come down there, sweep that liquidity, and then maybe come down into this zone, and then that's where it will come right back up. Okay, but see what you got to watch for now. Okay, so right now we are below this zone right now. Yes, it could definitely come right back up, but right now sellers have control. So this is where we might trade sideways, and tomorrow we have so much high impact news that it could be a real tough day to trade tomorrow. Okay, so did anybody take this swing buy setup last week? Maybe you netted 500, maybe 1,000, as high as 1,400 pips up there. If you didn't do anything, you could still be in this trade. I don't know, but I hope, guys, you learned something from this. Okay, swing trading can be very lucrative. It takes time to develop, but if you hit one swing trade a week, it could be anywhere from 500 to 1,000 to 1,500 pips, right? And then we introduced another chart, right? So you kind of want to have 3 solid swing trading charts, and maybe 1 or 2 of them will give you a solid alert for the week, and at least you can maybe get into 1 or 2 of those. Okay, so I'm going to move off of gold now because I want to talk about the oil swing trade that we were looking at. So is there any questions about this? Do you guys have anything? Is it clear to you guys what we have to look for? Do you guys see how it uses all of these different points of interest? If the volume, the only thing that's variable is the volume. If the volume closes above, it uses all of these as supporting areas. If the volume now is below, it uses all of these points of interest as resistance areas. And you can literally set alerts at each one of these locations and wait for the volume to naturally come to you. Okay, that's the patience and discipline, right? And when you know that it's getting in a phase where it wants to just trade sideways, that's again where you got to learn to stay out of that range and just continue to watch. You know that there's going to be buyers and sellers there, just like there was here. You have to know it's going through an accumulation phase, and once whoever has accumulated more and there's a catalyst like news, it could spike the move. And if you're patient and you're disciplined, you could basically get in with minimal to zero drawdown if you time your entries appropriately. And all you have to do after that is just manage your profit. That's it. Okay. So this is the exact same as scalping, right? If these were 5-minute candles, we had a big 5-minute news candle, we mark it up, we find half of it, we cut it in half, we find the point of control. This could be like a 5-minute bull flag. It has a high probability breaking out. There's to show you guys how it breaks out, but this is the all-time high. So I always say, guys, it's an all-time high for a reason. Some seller in October sold it 2 times right there and dropped gold down. So I always say, if they're going to protect their position, they try to protect it in this block. This block was the point of control of a daily candle, but you see there was a little bit more volume that kind of squeezed its way out of there, but it was answered by the sellers and they're pushing it right back down. Okay. So this is going to be, if it comes back up and it's strong and it's bullish coming through here and we close above here, then this zone will turn green, maybe that one as well. Then it might trade in here and then we break for a new all-time high and gold is gone. That could quite happen. That's on, it's still building. Excuse me. But right now, it looks like it might be developing a leg to come back down and test this area, okay? So that's on gold, okay? Now I just want to talk about oil because I was personally looking for an oil buy, but I want to show you how mindset, if you understand what you're looking for, you could go opposite direction, okay? So you remember our oil setup. This is what we were looking for. It was up here. And we were looking for that pullback to come down right there and look for a buy out of here. You see that when it came down and closed 95% near the lowest wick, it opened and it came back down. This is as far down as it came. It held in our big green zone. And then you see this leg coming right back up right there. That's where I got alerted. I had an alert in there, okay? I had an alert. As soon as I saw it come in, again, that's an impulse. Right? If you're going to trade 4-hour candles, these are 4-hour candles. If you wait for them to close, you'll get more confirmation. Now, when I see, and this is what I do when I'm scalping as well, I did not take this sell leg down, right? And that's why I'm educating on it. I missed out on a perfect opportunity to sell instead of buy. I was looking for this buy above here, but it came in and got rejected. Then it came in again and got rejected and closed as a shooting star. And then the next bar again was solid blue candle strong and got rejected. So you see how this zone held up red. There was no buy, right? So when there's no buy, what is the only other option we can do? Is take a sell, right? So you see that the buyers tried. If I saw a blue candle close above here, I guarantee you I probably would have bought the next blue candle and I probably would have been, and oil would have been moving up, taking out this high, and maybe we would have a different conversation. But you see where the sellers were strong, they broke it down, but it came to, look at where it tapped into, the bottom of our green zone, right at $57 a barrel. It came back up with this leg, but there's the neckline. You see, I was looking for that buy. If the buyers closed it above there, and then it would still be green right there, I would have entered in the buy and maybe it would be up here or here, okay? But you can see that the sellers were here. They rejected it here and they rejected it there. Then the final one, they brought it down. So this is where you could take a short position, right? You can eliminate your buying bias, okay? You gotta think like this as a scalper too, because sometimes I'm looking for a scalp to close above this point of control so I can scalp it back up. But sometimes when I see it comes up, it kind of, the sellers are there and they push down, then I scalp that leg back down, right? I am looking for a buy, but sometimes you'll see that the buyers are not there. There's more sellers than there is buyers. So then naturally, I'm a scalper that scalps both ways, right? I can buy and sell. I'm one of those traders. There's a lot of traders that only look for buys. They don't like selling. And then there's traders that only can trade like bear markets or bearish legs. I trade both. I trade everything. I trade all candlesticks, okay? So I can easily switch my focus. I didn't in this situation, but this is why I'm trying to educate you guys on, because I made my swing goal on the gold trade. But if I wanted to, I could have maybe possibly gotten an additional move here. Okay. And then if you do kind of the break of the body, stop loss, maybe even if you went with a conservative stop loss above 50% of that big bearish candle, look, you realized zero drawdown. It went directly right into profit, and you're kind of targeting, these lower points, take out those bodies. That's a nice move if you got it, right? I'm not saying anybody did or didn't, but I want you guys to look at these things. That's like a big move, okay? Coming all the way down there. And then you see when it came right back up, it found some support, came back up, but it's below. That big black candle, if you cut it in half, you found the point of control, you see where it came in, red line, back down. That little star candle, it's kind of like a clue that the market is consolidating. Whenever you see a star, if you see it in a selling pattern, it's called a evening star. If you see the star built at a bottom of a bullish leg, it's called a morning star, okay? You can see that it got held up right there at the 50% location. And then the next leg was the big leg, really bringing everything down. So you see now it's still selling. It's still selling. This big, massive daily green zone, look at the 4-hour volume is below it. So I gotta represent it as sellers now. So that's a selling block. So even if oil makes its way back into here, it still could sell right back down. If it starts coming in here, I got to understand that I'm counter trading in this zone. Okay. Until it officially gets out of here, then it reclaims its bullish point of control. But right now, the sellers are closing it below there. It could flag down here and continue dropping down. A better buying opportunity would be right here. That's why if I'm looking for a swing buy, right now, I'm right clicking. I already have an alert on there waiting. So you can see I already have an alert. So if oil comes, slowly back down here, then maybe that's where I'm looking for that buy to come out of there and bring it right back up. But do you guys understand how you can switch focus? Okay. That's why it's not, in my opinion, it's not good to just be a one-way trader, because if you were waiting for that buy, you saw that it got rejected, you could have potentially got into a swing sell and hit your weekly goal right there. But if you were stubborn and you had that bias that you're only looking for buys, you just missed out on a good setup, right? So that's how I scalp the markets, and that's how I use that type of mentality when I'm swing trading. I'm admitting to you guys, I did not take this. This is all kind of like hypothetical here, because I did really well on my gold swing trade. So I didn't really focus on this. If I did, I could have got good pips. So does that make sense, guys? Kyle? Yeah, understood, Justin? Good. If you guys got that, perfect. Okay. And then what you got to do is, maybe if you that's why swing trading, if you do a nice top-down analysis, you can keep your charts all week and you just watch the volume. Sometimes they'll run into second week and you still have the same levels. You don't even have to do any new charting. Okay. So that's what we got going on. And I just wanted to read a blog article right over here, guys. That's what I forgot to do. It's this: psychology and mindset in trading. Okay. And also what we do here is every week we give out the SST market over here. So what it is it gives you kind of an analysis of what to expect in the upcoming week. So it's a weekly update. So key earnings, we talked about it. Monday, Tuesday, Wednesday was Micron. End of the week, we got Nike and some other companies. So you'll see kind of just gives you a good understanding of the earnings for the week. Economic calendar highlights. So we're following up on post FOMC. We have the big day tomorrow morning. There's 8 back-to-back US high impact folders with the retail sales, core retail sales, NFP. Then you got the flash manufacturing coming at 945, so a lot in there. And then in-depth market looks for U.S. indices, NASDAQ and Dow Jones in specific, the U.S. dollar, USD JPY. It looks like the Japanese yen is looking to increase their interest rates. They don't normally do this. So it's been like 30 years where they've been steady decreasing rates and beyond zero. So it is interesting that they're increasing their rates, and this could have a carry-on effect to all other currencies around the world. Commodities, we just talked about US oil and gold in depth. Sub 55, if you follow OPEC and supply and demand on a weekly basis, there's a lot of developing news going on around oil right now in the world. So there's a lot going on, guys. Crypto is taking a little bit of a beating right now, but if you've been in crypto for all the years, you guys understand it has 80-90% pullbacks, and somehow it continues to defy odds and break all-time highs. So I don't know if this leg coming down is going to be an 80-90% leg coming down, but maybe it needs to revisit 60-65,000. See if it's serious, if investors are really serious about Bitcoin, or is this just another, who knows, another project that was introduced. It's been about 15 years, and we'll see. It's still, when you look at it, it's still like a teenager. My son is 14 years old, okay? So, it's growing up. A baby is born, it crawls, it walks, then it turns into a teenager. So it's a very young security. And it's taken a beating because it threatens banks and institutions. So they don't like that. And it threatens the US dollar. That's another thing. They don't like that. So there's a lot of institutions short selling it, trying to get it. But when it finds its true value, the buyers will be there, and hopefully it finds a nice higher low and continue to defy odds in the next years to come. But it's very speculative. I wouldn't suggest throwing your entire paycheck and your entire life savings in crypto, because it is very volatile. So you got to understand how this thing operates. Okay. So that's the economic calendar. I want to read this. Okay. So psychology and mindset in trading, changing your psychology and mindset in trading is crucial because it directly influences decision-making, risk management, and long-term success. Okay. So let's talk about some key things. Emotional control, one of the biggest ones. Okay. Controlling, I know everyone says you got to control fear and greed in trading, but it's easier said than done. But how do you do this? The way how you can control fear in the market is simply by trading with proper risk management. Knowing before, like tomorrow's going to be a very volatile day. You know that there's like 7, 8, 9 US high impact folders. So going into tomorrow, prior to even trading, you should know I'm risking $100 tomorrow, or I'm risking $300. At least going in, if you lose that, then you ask yourself, will this blow up my account? Will this ruin my entire day? Is this my grocery money? Is this my rent money? Ask yourself those questions. This is how you can eliminate emotions, okay? And if you're okay with losing $100 tomorrow, let's say maybe you have a $50,000 account, $100 is well within your risk. Yes, it sucks if you lose that $100. Believe me, I know it sucks, but it's not the end of the world. You can still bounce back from that the next day. You can still come back in the markets and recover that $100 and carry on with your trading. It's just a little speed bump, but it can be. But if you have a $50,000 account and you're risking half of it tomorrow, $25,000, and you're going all in, I guarantee you're going to trade a little scared if you go into a little bit of drawdown, because you're risking half of your entire account, okay? So we don't preach that. What we teach here is anywhere from 0.5 to 1% of your entire capital is within risk, okay? You can bump it up to 2% depending on your experience, but that's where I would cap it. If you start going into 3-5%, that is still very risky trading, because you could literally lose 5% of your entire account in one day. And I guarantee you, you will not be calm trading that. You will be you'll be scared when you go into drawdown, because the thing that is in the back of your head is, man, I'm losing 5% of my entire account. Then it brings in a lot of unnecessary bad behavior in trading. It brings revenge trading, because if you lose that, you're going to get pissed off. You want to make it back quickly. Then you're going to risk another 5% to make that 5%. And before you know it, you're trading on emotion. You're not looking at the candles anymore. You're not looking at your supporting areas. You're not following the trend anymore. You're just trading reckless. It's like if you go play poker, you're playing on tilt. When you're playing on tilt, nothing. You're not even looking at the cards anymore. You're just being a bully. You're just failing to accept that you made a mistake, and now you're just the whole cards are just imploding. The house of cards is falling down. You don't want to do that with your trading accounts. Okay, that's why when you're trading with these prop firms, you develop a lot of bad habits. Because if you buy a $50,000 account and it's $100 and you risk it all tomorrow, if you lose it, big deal. You lose $100 and then you just go buy another prop firm account and you come back in. But if you do that, eventually, maybe one day you're going to come in and trade live money, your own money. And if you've learned all of those bad habits, it's going to translate. There's a lot of traders that don't trade prop firms. They trade their own money, right? So it's a different mindset. I trade my own money every day. I don't trade a prop firm. So I don't gamble like that, okay? I want to have steady income every single day for the rest of my life. So I really have to respect my risk management. Okay, greed kills us as well. Like if you were in that gold buy and you were continuously wanting more and more and more on that gold swing trade, then you can kind of see what can happen in the markets, right? The markets can humble you. Okay, if you weren't happy with 500, 1,000 up to 1,400 pips, then the market could have taken it all basically away from you, So don't get greedy, guys. Like it's hard enough to trade the markets, let alone get in some successful trades where you're making your daily or weekly goals. That's why it's important to have goals, have discipline in trading. I hope all of us can learn discipline going into the new year, because you're going to start to eliminate a lot of these things that destroy us as traders. Once you control all of these things, I promise you, I can almost guarantee you that your trading will completely change. When you overnight success, it could literally become like overnight success. If you can learn, I'm not saying that you're going to fix all these today, or this takes time. This takes years. This took me years to learn, to master all of these things. Okay. But a little bit of progress every day is better than doing nothing, right? So just a little bit, just try. Okay. So let's just go over these one more time. Emotional control, fear, and greed. These are primary emotions that drive market behavior. Remember, markets move on fear and greed. That's it. And that's how traders capitalize. They capitalize on when there's fear in the markets, there's a lot of selling. And then when there's greed in the markets, you can capitalize on buying opportunities as well. Okay. A trader who can't manage fear may exit trades prematurely or avoid taking calculated risks. If you take a lot of trades and you're scared now, you might miss out on A+ setups. The trade is presenting you the best possible opportunity to go in, and now you're scared. Why are you scared? You might be scared because you took 5 trades unnecessarily and you lost, and now you're scared to take your 6, or you're scared to take a nice trade. But it could be an A+ setup, and now you're talking yourself out of it because you traded real dumb prior to that. Okay, so you can see how if you don't follow rules, you might miss out on possible A+ setups, and then you're missing out on making easy money, right? So you got to understand how important this stuff is. While unchecked greed can lead to over leveraging and holding losing positions too long. Okay, so one thing I want to mention on this is a lot of traders hold losses forever and keep adding to losing positions, right? I noticed that's a pattern with most traders, including myself. I was like that too in the past. I was so stubborn that I could not close out a losing trade, and then I would just keep adding to the losing trade in hopes of just recovering or coming to a break even or going back into profit. And the market kept moving against me and finally kind of cleaned me out, basically. So if we can add positions to losing trades and continue losing, Why is it so hard to add positions on winning trades? Think about that. It took me like 1 week thinking about this back in the day. I'm like, I can add to losing positions without even thinking about it. And I'm okay with it. But I could never ever understand when I was getting in nice, profitable setups, why could I not add onto profitable positions, right? Maybe some of you guys have that as well, but it took me a while to really come to grips with that. And I don't know what it is. It's the mindset of a trader. When we go and draw down, we have no problems adding more and more and more trades, more positions on drawdown trades in hopes that it's going to recover or come to break even. So we keep trying to dollar cost average in a losing market, and then it can completely clean us out or margin us out. But when you go in profitable trades, start adding to your profitable. If it's a profitable trade and it starts moving and it pulls back, try and add another buy position and have 2 positions. And then if they're continuing to move to the higher highs, now you got 2 profitable trades. You can take advantage of the trend of the market. But when I say test it out, that's what I mean. Test it out. Don't go all in. Test it out. See if this is a strategy that you might like. See if this is something that you can stay consistent with. Okay. So an example of this, during a market downtrend, an emotionally driven trader might panic sell at a loss, missing the eventual recovery. Conversely, during a bull run, they might increase their position size unsustainably due to greed. Okay, so we need to learn how to control our emotions. Number 1, fear and greed. When you can learn how to control these 2 emotions, you're well on your way to becoming a successful trader. But if you just master this, is that all you need? No, we have to have discipline and consistency in trading. So you have to stick to a plan every single day. You can see my plan is very boring when I trade. It's the same shit I do every single day. And if I switch to swing trade, it's the same routine, same plan I'm doing. It's just now I'm waiting for 4-hour candles to close as opposed to 5-minute candles, but nothing else changes. My risk management doesn't change. My targets don't change, nothing. I trade still, reading the tape from tape to tape or block to block. My rules are when I go in profit, I want to get my stop loss to break even, eventually maybe have a trailing stop loss and start closing out 80% in profit and leave the rest running. Okay. So make sure you guys are sticking to some plan on a daily basis. If you start deviating from your plan every single day, you're changing this, changing that. Next week, you're trying this, then you're confusing yourself. Then you're just, you don't have a solid plan. That's why you want to discover a plan every single day. It's your go-to plan and it's your same setups, and you just got to patiently wait for things to play out. Okay. So successful trading requires adhering to a well-defined strategy. Okay. My strategy, I can use the style how I trade on any security, any time frame, any session, anything. I don't care what you present me in front of me. I'm very confident in my style of trading that it works for everything. Why? Because I back tested it on everything for the past 20 years. There's not one security that doesn't follow mathematics or fundamentals or technicals. You can try and do whatever you want, but you cannot lie real price action levels. You can't dispute that. You can't dispute an opening and closing price. You can't. That's where the market opened and that's where it closed in that particular time frame. If you know how to dissect that volume, then you're well on your way to continuing to do good in the markets. So psychological resilience ensures traders stick to their plans despite short-term losses or market noise. Example, a trader with a disciplined mindset will follow their stop loss rules during volatile markets instead of moving stops out of hope for a reversal. Okay. So I know it sucks when you get stopped out. Some traders are taught to, move their stop losses and this and that, and you do what you got to do. Okay. But all I'm saying is make sure you back test what you're doing. Make sure you go over and look at your journaling and see your results. Okay. And this helps with a routine development. Okay. So what you want to do is you want to make trading just like your job, very routine, very boring. You clock in and you clock out. That's when you're going to start to understand you know exactly what you're looking for, okay? And then you don't have to be basically thinking anymore. You should just know. If a candle closes strong above structure and it's a big body candle, you should automatically know, I want to cut that candle in half and find the point of control and wait for the pullback in that discounted zone, okay? That's it. You got to have that every single time when you're trading. This teaches you a routine. And then you can become very consistent, okay? So even if we polish up our emotional control, we learn a little bit of discipline and consistency, is this gonna make us a successful trader? No, because you still have pieces of the puzzle you gotta put together. Next one is risk management, okay? Some traders adhere to risk management. Some traders shit on their risk management. They don't respect their risk management. So, you are very, very difficult to help learn the proper way of trading because you're not respecting any risk management rules. You are a gambler, okay? I'm sorry to say this, and it might hurt someone's feelings here, but I'm not here to, be your best friend here. I'm here to lay down the laws of trading. I'm here to lay down the rules. I want you guys to be successful in the new year. I don't want you guys to continue losing money, okay? If you're not trading with no sort of risk management plan, forget about trading, guys. I'm telling you, you're just going to continuously donate to the markets and lose and be pissed off and continue to suffer. That's up to you. Okay. I adhere to risk management rules, especially when there's high impact folders. I reduce my risk. During FOMC, I reduce my risk during that. Tomorrow, if I'm trading, there's 9 US high impact folders back to back. What do you think? That's a session that you should be increasing your risk. You should be lowering your risk tomorrow. Okay. So risk management, it helps you understand losses. Accepting losses are part of trading is fundamental. Okay. All traders lose. If there's a trader that is telling you they don't lose, they are full of shit. I'm telling you straight up. There's no trader on this planet that can sustain 100% day in and day out. It is impossible, okay? Not even just traders like you and I. It's impossible for Wall Street to sustain this levels, okay? If they are, they're rigging the markets. You can understand that, okay? Traders who view losses through a negative psychological lens might take drastic measures to recover, such as doubling down and losing trades. We're not playing blackjack where we need to double down, okay? You got to understand. There's casino. You can go to the casino and you can double down as much as you want when you're playing blackjack. You can go on tilt at the poker tables. That's fine, okay? Do that at the casino. Do not do it in the financial markets with your trading accounts, okay? We're not gambling here. We're not playing poker in the markets, and we're not playing blackjack. We are trading the global financial markets, and they have more liquidity than us. They have more leverage than us. And me and you are small little minnows in this big, big ocean of sharks and whales, okay? So I like to look at it as an analogy. I follow what the whales are doing. I follow what they do. If they leave me a little bit of crumbs to eat on the side and live a comfortable life, I'm happy with that. I'm humble, and that's good enough for me to live a good life, but I'm not trying to break the bank. I'm not trying to break Wall Street. I'm only one person, right? I can only do so much, and it's to put some food on the table and pay the bills at home. That's it, okay? So I understand that, okay? I'm a very humble trader. Maybe this should be on this list as well. Learning humility in the markets as well can take you to the next level as a trader. So position sizing. Okay, if you're trading in a very volatile market, decrease your position sizing, scaling in. Remember, feeler trades. We've talked about this for the last 6 years here at SST. Psychology affects how traders perceive risk and reward. A strong mindset fosters appropriate position sizing based on objective risk assessment rather than emotional conviction. So if you're trading in a consolidated zone or in a range and you see it's accumulating, lower your sizing, lower your position. And if you're incorrect, okay, it's not the end of the world. At least you take a small loss that's insignificant, and now you see how the market is really getting ready to redistribute that volume. And then that's when you can go in with confirmations, take a little loss, it's okay, but now you see the bigger move and go with the bigger move, and you can recover that little loss in a 5-minute candle, and maybe you can now get rewarded for learning now the move of the market. So position sizing. You can also increase your position sizing if you're on the right side of the move. So if you see that you're getting in and you're realizing no drawdown and you're seeing now you're part of the trend, add positions to that trend, right? And maybe that one leg up, you add a couple positions, that could be your daily goal done right there, okay? You're trading with the market now and you're making the correct decisions. That's when maybe think about maybe adding a position within the context of risk management, not adding an over leveraged position. It's scaling in another position, okay? Finally, think of trading as a long-term approach. Long-term. Remember, there's a saying, the tortoise, outlives the hare, okay? Slow and steady wins the race. That slow little turtle that's just cruising at his own speed, it beats the hare that's rushing, making impulse decisions, going fast, causing an accident, things like that. I'm the tortoise. I'm slow and steady. That's how I go about my life. Just slow and steady. I take it one day at a time. I take it one candle at a time. I don't rush. I used to. And I can tell you, I was that hare, over leveraging. I thought I was going to become a millionaire overnight. I thought I was going to have 10 Lamborghinis in the garage. I was that. And I lost everything. Okay. And I just want to let you know, slow and steady wins the race. Also in trading, have a long-term perspective. We're going into a new year in the next couple of weeks, 2026. Are any of you guys even looking into where you're going to be in 2027, 2028, 2030? Do you guys have any kind of goals, what you're doing with your short-term trading? Are you going to take that into maybe some investments? Are you looking for some dividend returns to earn some passive income? Are you learning about call options and have covered calls where the banks and institutions are paying you to hold like Nvidia and things like that? These are things that maybe you want to consider, because what I do is I do scalping, and the money that I make through like Forex or trading futures, I take that money. If first pay your bills, pay your debts, right? Then after that's done, take that money and get your money working for you. Start to invest it in the stock and options markets. Invest in dividend securities. Then you're getting paid paychecks. It's like you got a job. Like the markets are paying you now. So you're getting paid on a quarterly basis, on a monthly basis, and you're getting passive income through looking for a long-term perspective in trading. And it's not just intraday trading. Now you're actually turning into a long-term swing trader, and eventually, hopefully, some of you guys are going to turn into investors in the markets. And that's where I hope you guys have a long-term approach. So remember, understand, especially if you're young, if you're in your 20s, right? A lot of us are older, but we still have a long-term approach, especially if you're in your 20s. Have an approach for when you're in your 30s, when you're in your 40s, when you're in your 50s, because you can really set yourself up for success with the right mindset, okay? So a trader focused on long-term goals won't be discouraged by a string of losses if their strategy remains statistically sound over time. I went through a slump live with you guys, took a couple trades in a row, and I said, guys, I need a day off. I need to recover this slump. I know that trading is long-term. I know that I might go through a bad couple days, a bad week. We all have it in trading, but I still have that long-term mindset that I'm not gonna keep losing every single day for weeks and months to come, because I'm a very disciplined trader. I use proper risk management. I can continue to survive, and I have that long-term approach. I recovered that slump, and I haven't looked back since then. So you got to have that type of mentality as well. It's not a cocky mentality. It's not having an ego. It's just being confident with what you're doing, and to understand that you can overcome and you can continue to persevere in these markets, okay? And then we have cognitive bias awareness. So bias mitigation, meaning traders must be aware of biases like confirmation bias, where they seek information confirming their beliefs. Ignoring contradictory evidence, an involved mindset helps recognize the counteract these biases. Example, a trader might hold on to a losing position longer due to sunk cost fallacy, believing they're due for a turnaround. So, when we keep telling ourselves these things, it's eventually going to turn around. I've been holding this in drawdown for a day. The next day, it's got to turn around. If you keep telling yourself these false fallacies, the market doesn't need to do anything. The market is going to move wherever it wants to go, regardless if we're trading or not. Have you guys ever taken a day off of the markets and didn't trade? Did you guys see that the markets were trading that day without you? Did you see that when you took a day off, the markets are still moving up and down and sideways? When I realized that, I said, I need days off. The market is going to move up, down, and sideways without me. So whether I'm trading it or not, the market doesn't care about me. The market could care less whether I'm trading it or not, okay? We always have these things that we blame the markets. The markets do not give a shit about us. Do you understand that? The markets move. If all of us do not trade tomorrow, all of us on YouTube, there's 156 of us, and all of us on Zoom, if we don't trade tomorrow, all of us, do you think that the market is just going to stop? No, it's going to continue to trade. So whether we are trading or not, the market moves, okay? So when I learned that, then I said, I'm just going to let the market come to me naturally. I'm going to wait. If I have to wait 1 day, 2 days, 3 days for it to come where I feel comfortable taking a buy or sell, whether it's a scalp or swing position, and it comes in there, at least I know I'm buying or selling at a point of control or zone where there's more pending orders waiting to get executed, as opposed to just trading in no man's land in the market, okay? So that's where you got to learn. The market will pay you if you're patient and disciplined. The day you become impatient, guess what? You are that trader that's losing money. And you know what? I know it sounds awful, but when you're losing money, guess what? You're giving it to someone who's waiting disciplined. That's what it is. When I take a loss, it's my impatience, and someone who was disciplined got paid, right? So when I win, I know that liquidity, that money is coming from someone in the market that's impatient. So when I learned that, I said, I'm tired of giving my money away, my losses. Those are lessons. But I also see that it's impatience, and I'm just giving my money to traders who are patiently waiting to take my money. So when I learned those principles, I said, now I'm going to wait all day in the markets, because I know that there's a lot of impatient traders. I was one of them. And that's why 95% is a statistic that holds why retail traders fail, is due to just being impatient, not educated enough in the markets. And they're just giving their money to patient traders that are waiting, right? So if you learn that, then you got to continue to learn that mindset. Start being a patient trader and start learning how to make money from impatient traders or impatient markets or impatient financial institutions, because they are impatient too. They lose as well, okay? And then finally, number 6, learning, adaptation. Keep adapting to these markets. They move every single candle. It's a new candle opening every couple minutes, every 5 minutes, every 4 hours. You got to learn how to adapt with these markets, okay? You can't hold on to your ego. Whether you think gold is selling down, we're right at the cusp of breaking for a new all-time high. And if it breaks, you still can't maybe have that selling approach, that bias. You gotta flip and maybe become a buyer now. Okay, you gotta understand. The markets are fast. They're fast. They move. There's news every day. Look what's going on around in the world. Look in your backyard right now. The world is crazy right now. Okay. So we have to learn how to adapt, because these financial markets are going to get very volatile. If this increases and continues going into the new year, I guarantee you we're going to see crazy moves in the markets, right? We haven't even had a market sell-off as of yet, okay? When a bear market comes and the markets are really tumbling, like Dow Jones and NASDAQ and S&P 500, there could be chaos, right? So you got to learn how to adapt in these fast moving markets. They're not trading how they were years ago. It's completely different, okay? So you have to have continuous improvement. If you're not continuously improving, then you're slacking. You're staying behind. And I'm saying this for myself. If I don't continue to improve on a daily basis, I'm falling behind, right? So I'm not naive to this fact that I got to continue to read. I got to read what's going on. I got to research. This is what keeps me moving ahead and adapting to the markets. Whether you like it or not, you're going to have to do this at some point. So a healthy trading mindset embraces mistakes as learning opportunities. We all make mistakes. In life, in general, we make mistakes. Some of you guys maybe made a mistake today driving, and a police caught you turning without putting your signal on. You made a mistake and you paid for it. He gave you a ticket and there's your lesson, right? So if I make a mistake tomorrow trading and I lose $200, that's like speeding in a 50 zone and a cop pulling you over and giving you a ticket for $200. Why do we not do, when we learn from that, then if the police gives us a $200 ticket, then when I'm going through a 50 zone, I'm driving 50 like a grandma. I'm not speeding because I don't want to pay another $200, right? Or lose demerit points, even worse than that, and lose my license. So if we lose money in the markets, why don't we look at it as a learning opportunity to not do that again? Think about it like a police pulling you over and giving you a ticket. Why do we learn when a police gives us a ticket, but we don't learn when we're just throwing money away in these financial markets? Think about that, guys. Use that analogy. Tomorrow when you take a loss, look at it. It might be $10, might be $50, might be $100. Some of you guys might be losing $1,000, but that's $1,000 like a speeding ticket that someone caught you for making a big mistake in the markets. It's like the police in the markets. The market caught you lacking and gave you a ticket. Now, what do? Do you learn from it? That's $1,000 lesson, let's say. You better take a day off and learn from that, because if you don't figure it out, you're probably going to do the same shit the next day or the next week, and you're going to lose another $500 or $1,000. And you're going to continue to do those bad habits because you have not learned, okay? So you got to learn, guys. How many of you guys are reviewing your trades? Till this day, some of you guys are still not even journaling. You guys think journaling is a joke. Journaling is probably the best thing you can do as a trader. I love when people make fun of me. Say, oh, Ron, you journal. Oh, you're a pussy. Oh, you're this or you're that. I don't give a fuck what you guys call me. Journaling is the most important thing in trading. You'll learn a lot about yourself. You learn from your winning trades. You learn from your losing trades. You learn from your break evens. You can go back at the date and time, say, what did I do well? What did I do wrong? Maybe you sold this candle here, and then if you didn't go back, you were selling in a bull flag. Why were you doing that? And you got caught lacking and you lost money. If you don't go back and review that, you're probably going to sell tomorrow. If there's another bull flag and you see a black candle, you'll probably do the same mistake. That's up to you guys if you want to continue that cycle. I'm trying to help you guys to not do this, right? And I went through this phase in my life. It took me 5 years, not 5 months, not 5 days. It took me 5 years of fixing this. And I had to fix this on my own. No one wrote me blogs. YouTube didn't even barely exist back then. There wasn't like any real, trading groups or anything like that. This was all self-learned while I was losing thousands of dollars. Okay. So if I can do it, why can't you do it when we're helping you, right? You got to be able to help yourself and understand that you got to clean this shit up. If you don't, I'm not saying to clean all of these things all tonight, like, number one, emotional control, discipline and consistency, risk management, have a long-term perspective in trading. Don't just think for tomorrow, think months, years out, have your cognitive bias awareness, learning and adapting. Yes, you got to work on these things. It takes time. But if you chip away at these every single day, you got to know that you're becoming a better trader by doing this. And then you're going to really be consistent in these markets. Yes, you're going to take losses, but those losses will be managed well with risk. You'll learn from them and you're going to adapt. And that's how you grow as a trader. That's how you grow as an individual. That's how you grow as a person. And then you're going to start helping others that are struggling too in trading, because you're going to say to them, I went through what you're going through and let me help you now. I've learned how to overcome, and you're going to become maybe a mentor. You're going to become someone who your friends who are trading will look up to you and say, he went through it and he knows what he's talking about. So I hope that you guys all become like mentors and help. And when you're at the dinner table over the holidays, you're talking about the markets and things like that. Because I guarantee your family and friends have questions, but they're scared to ask, right? Not a lot of people know anything about the financial markets, right? So you're well ahead of the game, but you got to continue learning. Okay. So just going off of the continuous improvement. Example, after a failed trade, a growth-oriented trader reviews the trade, win, loss, or break even. You got to put some time in review time. Whether you do it at the end of the day, at the end of the week, or on the weekend, you got to put some time into review. You decide that. I say for basically every hour or 2 hours of trading, you should be putting at least 30 minutes of review. That's kind of like what I go by. So if I'm doing a 4-hour session, I put in 1 hour of review. If I do 20 hours that week, I put in at least 4 hours of review on the weekend. That's how I go about it. It's kind of like for every 2 hours I'm trading, I put in 30 minutes of review. Okay. And if you know what you're reviewing, you can go through this rather quickly. You know exactly. It's a routine. I know when I'm reviewing my trade, I know exactly what I'm looking at. I'm looking what I did wrong right away. Was it my risk management? Was it my stop loss? Was I trading counter trading? Was I trading with the trend? What did I do? What was the mistake? Was I trading during news? There's got to be an explanation. There will always be an explanation if you look for it. If you're not looking for it, there will be no explanation, and then you're going to be left with like a foggy mind, and you're not even going to know what happened. And then I can guarantee you're probably going to do the same thing when you're trading the next day, because you're just going to repeat the same mistake over and over and over until you learn from it. Okay. So make sure you identify your error, right? It's an error. Professional sports players make errors on a daily basis. You're going to make an error too as a trader. You got to understand it's part of the game. Trading is a game, just like a basketball game, just like a football game, just like a baseball game. You got to understand professional athletes make mistakes and they get paid $50 million a year, right? So why would we not make mistakes as traders? But you got to learn it's part of the game and accept it. Don't cry. Don't get pissed off. Don't get mad. Just learn from the mistake, okay? And then is it your strategy? Is there anything we can adjust? It will be right there. You'll see the mistake and you'll be like, oh man, why did I do that? And then you'll know for the next time, okay? And don't do this excuse. This is a weak excuse. I used to do this, blaming the market. The market, again, does not care about you and I. The market is going to move whether we're trading it or not. If you take a trade right now, the market is still going to move where it wants to move. If you don't take a trade right now, the market is still going to move. So we can't blame the market, right? The market is its own entity and it's moving. The volume is moving without us, okay? So this is a weak excuse. I used to blame the market when I was losing. And then I figured out that I was the one. Trading is you versus you every day. It's you versus you. You know that voice that's talking to you in your head when you're taking a trade, when you're in drawdown, it's telling you to do this, to do that. That's who you're trading up against every single day. It's your own psychology. It's your own mindset. It's that voice in your head that's telling you to do all of these things. That's who you got to beat. You got to beat that, okay? Don't worry about the markets. The markets we blame the market makers, we blame the brokers, we blame the prop firms. Yes, they play a hand into it. They can slip you up. They can cause a shitty fill. There's spreads, there's this, there's that. That's part of the game. That's the cost of playing the game. That's the cost of trading, okay? You got to be calculating those into your trade. But overall, trading is you versus you. You got to become better than you were the day before. You got to become a better trader than last week. You got to become a better trader in the month of December than you were in November. You got to become a better trader in 2026 than you were in 2025. I'm saying this for myself too. I got to become a better trader in 2026 than when I started. I can't even remember the year. It was probably 1998 when I took my first trade. 1998. I think I was like 16, 17 at that time. My dad opened me up an account. He signed it under his name and gave it to me. Penny stocks was my first trade I ever took where I hit the buy button. It was exhilarating. It was time of my life at that time, but I lost everything. But that's when it started, okay? So I'm trying to improve all of those years, become a better trader. And I think over these years, I have a good track record showing improvements, not doing it to impress you guys, but doing it for myself personally, telling myself that I'm doing better and better year over year, month over month, week over week, day over day, candle over candle. Okay. So in summary, guys, developing a robust psychology and mindset early in trading. That's why I do these, because some of you guys might be on your first week of trading. If you learn this right now, you're so far ahead of all of us. Some of us have been trading 5-10 years and we don't learn this until after that. Okay. So if this is like you're in your 20s and you're young and you're an aspiring trader, man, you are getting it to you like on a silver platter. Learn mindset, and then you're good for, hopefully, if you respect these 6 things that we talked about. Okay. So to get this early mindset in trading is vital, as it underpins all other aspects of trading. Emotional control, discipline, and long-term perspective help manage risk effectively and avoid the common pitfalls driven by cognitive biases. Traders with a mature mindset are more likely to achieve consistent success and adapt to changing market environments, ultimately leading to a sustainable trading career, which I hope all of you guys are aspiring to do. But we know that that's not the case, because statistics do not lie. Maybe last time I looked at it was about 90% are failed traders, but that doesn't really say too much. It says 90% fail. I don't know if that means they quit trading altogether or what it is, but you guys can see, you guys are traders. You can see a lot of traders fail. I don't know if they quit altogether, but majority of traders, retail traders, fail at this. Why? I'm telling you right now, they're not following these 6 principles. You got to know that they're I can tell if they're a losing trader over time. I'll be the first one. I don't even need to meet them. I'll just by reading this, I know that they're trading a lot on emotions. They don't have good emotional control. Like, tell me if I'm right or I'm wrong. They probably have no discipline or consistency in their trading. They probably don't respect their risk management. They probably are just a short-term trader, just looking for get rich quick, quick results, fast money. We know that the markets don't move like that. That's why if you're following your gurus and things like that, where they're showing you they're getting rich quick, guys, if you're still falling for those gimmicks in 2026, I'm sorry to tell you guys, that shit's not true. You got to have a long-term perspective in trading. Okay. If you have that short-term aspect, you could get fooled into that lifestyle, which you're never going to achieve. Okay. And then I don't know so much about this one, cognitive bias. Maybe we can kind of not lean more towards this one too much, but also learning and adapting. I bet you those losing traders are not reviewing, they're not consistently learning, and they're not adapting to these fast-moving markets. Okay, so guys, this is a free blog available. I hope that, I hope it helped someone on today's call. I hope it inspires someone on today's call to think about psychology and mindset. This is the program that I'm doing now, right over here. So this is going to be me as a psychology and mindset coach for you guys. I have 25 topics. First topic, starting this Friday. I can tell you what it is on. Let me just pull it up here. So topic 1 for this week on Friday will be the introduction to trading psychology, importance of psychology in trading success, and an overview of common psychological pitfalls. Okay, I'll be going over that. So that one will be released on Friday evening. It will be pre-recorded and it will be uploaded to our website for our members right over here. So it gives you a little something going into the weekend if you want a little homework or to get better at psychology and mindset. We do enough live trading sessions, we do enough other things, but we really got to pinpoint our psychology and our mindset. Like technicals and fundamentals will only take you so far in trading, then you really got to lean towards mindset and psychology. Okay, guys, I got to wrap it up. I'm not feeling the best tonight. I told you guys we're just going to go up till 8, and it is past 8. You can see how maybe this M pattern is playing out. Maybe it will come down here, see what will happen in this zone. Place an alert, or right here at 4,287, maybe right at the top of the green zone. I like that zone, 4,275. Then you're right in the middle of this consolidated box and you're tapping into the green zone, and it's a nice psychological level. So, what I do is bring this yellow line down, right down there, and I'll add an alert there because I could be looking to maybe buy out of there, or if the volume is closing black below there, it's coming into that neckline and it could continue selling down. Okay. And that's if you're continuing to look for some swing trades. Guys, the rest of the week, tomorrow when we're back, we're back to regular scheduled programming. So we got Tokyo tomorrow, 6:30, 8:30. Join us. If we're going to do just go into gold, top-down analysis, daily 4-hour hourly, and right into the 5 minutes. And then we'll be doing this. Then we'll be scalping 5 minutes tomorrow, okay? Our swing trading kind of education, those 4-day classes are done for now. I'll bring those up in the new year. I'd like to do one of those at the start of the week. Give us maybe 3 outlooks on like gold, oil, NASDAQ, US 30. We can do the US dollar. We can do GBP USD. We can do anything. But maybe I can do a nice analysis for all of us, provide you guys with the outlooks, and maybe you can follow those for your swing trading. And then we can come right back into scalping the markets together. So, but I want to show you guys that there is also swing trading that's very lucrative. And you can see that gold buy ran for approximately 1,400 pips. So, if you have a modest weekly goal of 250, 500, even 1,000 pips, one swing trade is all it takes, right? But you got to be able to identify the locations, patiently wait for them, look for your A+ setups, and follow the blog that we just covered, okay? And guys, I had a lot of fun with those swing trading sessions. I know it's not as exciting for you guys on these sessions because we're basically just identifying levels and waiting for that 4-hour volume. So that's why, like scalping is much more fun. We learn more, we see more price action, candles opening and closing, but we'll do the best of both worlds. That's what we'll do here at SST, okay? And I want you guys to learn both styles of trading because what I do is I have 2 separate accounts. I have one brokerage account strictly for intraday and scalping on the lower time frames, and it's got a certain amount of capital inside there. And then I have also a swing trading account where I'm using that account and it's strictly swing trading. So when I took that gold buy, it was in a different account and it allowed me to to trade that trade with that account. So I'm not using my swing trading and my scalping account intraday and switching it up and things like that. So I have 2 separate accounts. That's just me. But the way how you guys do it, you guys do it. I used to do it with one account and I found that I couldn't sustain that, just one account. Cause then I don't know. I like to separate things. That's how I am as a person. I kind of tidy up things like that. So I have 2 separate accounts, one strictly for swing trading, one strictly for scalping. And then I have my 3rd account that I use for stock and option trading through my financial institution, TD Bank. Okay. Guys, I had a great call. We'll see you guys tomorrow. Thank you guys. If you guys can kindly leave us a like and subscribe to the channel. If you guys learned something today, if we kind of maybe helped your mindset a little bit, but remember guys, polish up your mindset, polish up your psychology, and it will take you to the next level you need to go in trading, okay? Candlesticks, price action will only take you so far, right? You have to have those other things. I know a lot of you guys are professional price action traders. You guys are getting really good at this. You guys are getting much better than me. You guys are, I'm getting older. So you guys are taking over. I'm going to pass the torch to you guys and you guys are going to light the next candle, right? So I hope you guys are learning and be better than your uncle. I'm telling you guys are the new generation, I hope, of traders. So you guys will take the torch from us. You guys are the next candle that's going to shine, but make sure you guys are also adhering to your risk management. You're adapting to the markets, continuously learning, being humble in these markets. Have a little humility too. Takes you far in trading when you're humble and you don't get greedy and things like that. Okay. And guys, I just wish everyone a great night. I'm going to go get some rest. I'm not feeling good tonight. I don't want to get sick. I know I can feel the bug coming on. So maybe if I just get to bed, have some Neocitrin, I'll be better for us tomorrow. And I'll see you guys. So thanks guys for joining. And just please tomorrow, everyone, be careful trading tomorrow. Okay. It's a very, very volatile day. Man, there's going to be a lot of accounts that are going to I don't even want to say it, but there's going to be a lot of people that do a lot of silly things tomorrow. We have NFP with flash manufacturing, flash services, and our core retail and retail sales. All those red folders, okay? So it's kind of getting all of this stuff from the government shutdown. Now it's all getting filled in. So they're just clumping all of these folders together. So please be careful tomorrow. Okay, guys? Have a good night. God bless everyone. And we'll see you guys tomorrow. Thank you guys so much for joining. And we'll see you guys tomorrow, 6:30 p.m. We're going to start and we'll go to 8:30, scalping the markets on gold tomorrow. Okay? Have a good day. Thanks everyone for joining. Enjoy your night. Make sure to read that blog if you get a chance. Hopefully you have new psychology going into the new year. Okay, guys? Have a good night, everyone.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.